What's going on, guys? Philip at Trade Genius. Bitcoin just put in a $1,000 bar after looking like it was ready to jump off a cliff. So is Bitcoin going back to the upside? Usually bars of this size means the party is started. Is that the case this time around? Well, we're going to take a look at the charts and see what it all means. So let's dive into this video.
Trade Genius.
Hey guys, how's it going? Hope your week is doing well. So when we last talked about the Bitcoin price action, we said make sure you take a look at the indicators here, where this indicator was rolling up, crossing over, or stochastics were still pinned down there, and watch out for the downside. And sure enough, we got that, and we took out this low and this low. And a lot of times you'll see that happen with the Bitcoin market. So those lows got swept, and then price immediately moves up. Now, normally when we see $1,000 bar low to high or high to low, that's usually the start of a directional change. But if you notice from the last time that happened, we had nice follow through the following day. We're not getting that here, and we've seen the price action bump into this trend line here. So we've got that in play, that trend line in play. And also, if you take a look at the 4-hour chart, you will notice that we're also playing with this trend line that price has been basically acting as a home base for price. Either price is bouncing above it or hitting its head below it. And interestingly here, it's broken above it, but it's just hugging it again. So we have to watch for the downside break here, back down to this range, ultimately heading toward this trend line here in the lower 6,000s. Now, if we look at some long-term data, this is the Bitcoin log growth curve, and this takes into account the entire range of the move from when Bitcoin was even first started to be charted. And you'll see it does a job of outlining the high and low range. And we came down and we touched exactly this line and bounced. And we were in the room, we got long in the under 6,500, we got long and took profits around 6,800. And then Bitcoin proceeded to rip another few $100s higher before hitting the 4-hour 200 period moving average and cooling off. And so that's where we're at now. So don't be surprised if we stay under this log line here of 7,800 or so. Probably going to be a ranging area for Bitcoin for a bit here, and we'll take a look at some longer term stuff to show you why. On the Bitcoin Delta, futures jumped up, so we flipped to now a long condition, which means that these moving averages, the 65 and the 20 weighted moving averages, become support. So the 65 is at 7,030 or so, and the 20 is at about 69.86. We hit our head on the 200 period moving average. This is the 4-hour, and could not get above that. So we could be range bound in here as well, with the 200 period moving average roughly at 74.19. If we look at some on-chain metrics, you'll notice that the NVT, which normally when it crosses up gives us buy signals, and this time it crossed up then back down, so that was a false breakout. We are holding this trend line, however, so if this trend line does break, then we could see more downside. The beam indicator above here, we'll talk more about this week. But basically, we've come to an area where areas of gray is kind of like your accumulation phase before it takes off after halving. So it's prior to halving, during halving, and after halving. And when we get our dips back into this 15 line, like we have here, we talked about that last week, that's where you want to start accumulating, and that's where we're at now. So even though we've pulled back in this area, it's actually historically a great time to get into Bitcoin longer term and where your largest returns come from. Looking over here at the miner capitulation, we almost had it cross back up back here on December 10th, but price rolled over, and that did not help the hash rate. Miners still looking to be pulling hash rate back, and as such, the mining hash bands are negative. So we'll have to see if subsequent price action does hold this low here at 6,438, and if that does hold, we should see these turn up. Once they turn up, we'll get a green light like we did back here. Boom. And again, that would be your confirmation to dip your toes back in the waters to the long side. Crypto fear and greed did take a dip down to 15, back up to 21. You know, those levels are buyable levels. Just keep in mind, though, we do have a trend line down here on these fear and greed. So don't be surprised if we see this dip back down again. But, you know, historically, when we get these lower readings, like the last one we got down at 17 back on the 25th, if we were to look at the 25th right here, you see that that was a local bottom. moved all the way back up to that trend line that we're hugging now. So those are buyable dips, and we'll keep an eye on that. And you can monitor that for any levels, again, that dip below 17. Get ready for another bounce long. All right, if we take a look at the cycle repeat graph, you'll see that we have kind of met back up with a typical price cycle action. Now, if we zoom in on this, you'll notice that we're actually underperforming a little bit, but with this move back up, we've met back up to expected price action. Now, follow price action. What happens here is we see another move down, another grind up, and then after mid-January, another push down. That's probably going to get everyone real bearish that these levels don't hold, and you'll probably see things online get pretty bearish, and then a chop sideways, and then we just start to make that grind higher. That's usually how these areas get left behind, is quietly, slowly, until things go back to a more upward trajectory. And then according to this cycle graph, we'd be looking at really starting to see new highs back above 10K in June. So let's see how this plays out. Currently, we're back on track, but just keep in mind, this does have some downside per the cycle repeat cycle graph model. Last thing we're going to look at is where the liquidity is. Bitcoin loves to go after liquidity. If you see down here, there was a pool of liquidity. Bitcoin ultimately comes, dips down, takes out that area that had all that liquidity, runs back up, and taps out, eventually stopping at where this constant line was of liquidity. And a lot of times you'll see price, when it does a very large move, will end up hitting one of these lines. That's why it's important to note that this line down here at approximately 6,300 or so to 6,320 would be an area that if we saw a downside move takes out this prior low, would probably tag that level and then bounce up. So keep an eye on these levels. This current area of liquidity right now is below 7K, so don't be surprised if you do see Bitcoin dip down into this. Okay, that's not necessarily a bad thing. We do have a bit of liquidity marked off here at around the 72 to 7,300 area, and we may see that after this area gets tapped here. So that's your liquidity read for this week, for the next few days. It's good to keep tabs of that because Bitcoin likes to tap into those areas of liquidity. All right, guys, well, that's it for this video. Again, to summarize, Bitcoin's come down, hit that lower trend line. We got the completion of the stochastic cycle. It is going to do a cross up here, so it's going to be similar to what we saw here and also what we saw here. So this is a local low being put in. Currently, this move looked a lot like the start of this move here going up, but it has stalled out. So it'd be interesting to see if we can get a move and get back above the 74.40 level, then we could actually start talking about a move back to the upper part of this channel at 9,200 even. But I kind of think that right now this thing is going to stay down in this level, chop to downs, and then we'll see how that resolves out after this week. All right, guys, well, that's it for this video. Please hit like and subscribe, really helps out our channel, and I'll see you on the next one. Take care. Bye-bye.
Trade Genius.